apologize for starting a little bit late today. We had some votes over in the House of Commons, which, as I'm sure you understand, I, in particular, am not able to control, and we as members, these are decisions that are made by the House, and we're subject to them. So I'll proceed without further ado. From the Bank of Canada, Carolyn Rogers, Senior Deputy Governor. Thank you for coming in today. And Carolina Munoz, Managing Director and Chief Financial Officer. Nice to see you as well. And from the Department of Finance, we have Evelyn Dancy, Assistant Deputy Minister, Fiscal Policy Branch. Good day. Nice to see you again. And as well as Nicholas Moreau, Assistant Deputy Minister, Financial Sector Policy Branch. So just to all the members, both departments have indicated, the bank as well as the finance department have indicated they do not have opening remarks. So I'm going to begin, turn it right over to our first round. And Mr. Chambers, you have the floor for up to 6 minutes, please.
Thank you very much, Mr. Chair. Welcome to committee. It's one of my first times at Public Accounts in a while, but it's nice to see you again. I just want to we'll stay on the bank losses for a moment. I think, so 22-23, the loss is $3.1 billion. Is that correct?
So there's a little bit of a transposition. Our year end and Department of Finance's year end don't match up, but if you're looking at the public accounts number, that's the correct number. Yeah.
And the year prior, I don't have the number in front of me, but was there a loss recorded in the year prior?
Accounts? I'll maybe turn to my colleagues.
21, 22.
I have 22, 23 numbers with me.
You don't have them. Okay.
I don't think so.
That's okay. But it's oh, sorry.
We had a surplus in the public accounts of $2.3 billion.
All right, so we went from a surplus in 21-22 to a loss in 22-23, and the expectation is for a loss again in this next year, correct? Okay. And my understanding is that the loss is actually very sensitive to the prevailing interest rates. That is, if the interest rate goes down, the losses will shrink. Is that correct? Okay. But if the interest rate stays where it is or goes up, the losses will grow, correct?
Correct. As you said,
Okay.
It's sensitive to interest rates. Yeah.
So, and the projection, the government's projections are that interest rates will actually go down. So the government is projecting its fiscal track or its fiscal health that interest rates will actually fall. But if interest rates just stay the same, that means the loss will actually be bigger than what the government projects. Is that correct?
I'm not able to speak for the government's projection. I'll maybe ask my colleagues to do that.
We have a limited ability to forecast Crown Corporation income into the future, but what you've described as the general relationship between interest rates holds.
Okay, but the Department of Finance does have a projection for losses of the bank going forward, does it not?
We do.
Okay. That projection was not shared in the budget. I'll note that the Bank of Canada losses were consolidated with the government's Canada Mortgage Bond Program. I'll ask the bank. That wasn't your choice that wasn't the bank's choice to consolidate that line item in the budget, correct? You weren't consulted on that?
Not that we're aware of.
Okay. So for the finance department, like negative $3 billion is a relatively material number. It would be very helpful for committee members and Parliament if we knew what the government projects these bank losses to be in the future. Is that something you could provide the committee?
It is. For the presentational purposes in the budget, as you say, we aggregate with other Crown corporations, but we're able to follow up in writing.
Okay, thank you very much. That would be very helpful. Now, part of the other reason there's losses is because the bank purchased government bonds, right? So this is a direct result of the quantitative easing activities that the bank undertook, correct, during COVID?
Correct.
Okay. Definitely look forward to the projections of the losses. If I may, I'll just switch gears a little bit and talk about M2 money supply. I saw a chart that's showing the Bank of Canada's balance sheet shrinking over time, which makes sense, right? Quantitative tightening. but I also have seen a chart showing M2 is actually growing. And I'm trying to understand why that's the case. If the bank is shrinking the balance sheet, how is the measure of M2 growing? Like, where's the money coming from?
So there's different definitions of the supply of money, and they measure different things. So M2 would largely grow or shrink according to demand for loans at banks. So M2, I think of M2 as the supply of money that's generated by commercial banks. So as there is an increase in demand for loans, banks can increase the supply of M2 by providing more loans. Those loans ultimately end up in savings accounts and other places around the economy. Generally, the demand for credit has been coming down, and the M2 numbers are relatively low over a historical perspective. So they are lower, but
Okay.
they would not. You wouldn't necessarily see those show up on our balance sheet.
Okay, thank you. Two quick follow-ups on that.
Yeah.
Is it possible that the government's borrowing activities, which are very substantial, not the rollover in debt per year, but the new funds required of $102 billion this year and $63 billion last year, are contributing to the growth of M2? That's a demand for credit?
Not directly, I guess.
Okay.
Indirectly.
So potentially indirectly. And then last question, Mr. Chair. It would be very helpful if the components of M2, is it something that you'd be able to share with the committee, the parts of M2 that are growing, that we might be able to kind of just understand, try to figure out where the money's coming from?
I think we can probably do that.
Okay, thank you very much. Appreciate your time. Thank you.
Thank you, Mr. Chambers. Turning now to Ms. Killey. Do you have the floor for 6 minutes, please?
Thank you very much, Chair, and thank you to the witnesses for being here today. I'll start with our Bank of Canada representatives here. Now, in the bank's latest monetary policy report, you make note that there's been a downward momentum in core inflation, and that should this continue, it will put inflation down further. Can you expand on this just a little bit further and help us understand when we can expect to see inflation rates return to target?
Well, my colleague and I are here on the assumption we wanted to talk about public accounts in the bank's financial statements today. The governor and I have appeared twice last week in front of once in front of the House Finance Committee, once in front of the Senate Bank Committee, and we've answered most of these questions. I can maybe give you a short answer. We're tracking a number of things ahead of each interest rate decision. We pay close attention to core inflation because it's a good measure of the sort of what we call the underlying momentum in inflation, and it strips out some of the more volatile elements. So that's a number we pay close attention to. But we're looking at a number of variables each time we make a decision. Our next decision is in a couple of weeks.
And what are you projecting for that next decision?
I'm projecting that we'll make it with the data that we have in front of us at the time of that decision.
Thanks. Now, after the budget was tabled, Governor Macklem made comments about the government's fiscal guardrails and how the budget committing to those guardrails is helpful. As we see core inflation continue to come down, can you expand on your comments about how Canada's fiscal position has not really changed since the budget was presented?
Well, again, I would just repeat the remarks that we made last week.
Sorry, I wasn't at that committee.
Sure. So I'm gonna absolutely repeat them. We look at the overall spending of all levels of government when we project, when we make our projections. And we take that as a given. The budget that came out most recently from the federal government came out between our projections. So we will take a close look at it, and it'll be incorporated into our next forecast. But as the governor said last week, the broad outline of the budget, the combination of the additional spending combined with the tax measures kept the government within its fiscal guardrails. So to that degree, we don't expect that budget will have a material impact on inflation.
Thanks for that. Now, many countries are dealing with very similar economic challenges and uncertainty in tackling the challenge of bringing inflation down. Can you perhaps speak to how Canada is faring in comparison to other G7 countries?
Sure. I mean, the country that I think many Canadians watch most closely would be the United States. I would say broadly that in the United States right now, the economy is relatively stronger compared to the Canadian economy. And inflation is a little bit, we would use the term stickier. They're having a more difficult time getting inflation down. Underlying inflation looks to be coming down a little more quickly in Canada. We need to see more data, but that's been what I would characterize as the most recent trend.
Is it a fair comparison, the U.S. economy versus the Canadian economy? I know we have significant differences in how things operate between the two. Is there a more comparable G7 nation that you think you can perhaps compare Canada to?
I think the reason that we often compare to the U.S. is because it's an economy that has a relatively big effect on our own economy. It's our largest trading partner. So I think that's really the reason that we often compare to the U.S.
And I know we often say that, in fact, this is accurate, that in the past 8 years, we have signed more trade deals with other countries across the world than in the history, trying to diversify our own economic prospects here in Canada. Do you think that is going to have an impact on, or has had an impact on, how our economic recovery has been going?
I think in general, for a small open economy like Canada, trade deals are an important part of strengthening our economy. Let me put it that way.
Thanks very much. I'll turn to our finance officials here. Now, the public accounts reported the deficit was $17.5 billion lower than forecasted. Given this fact and that we maintain both the lowest deficit and net debt to GDP ratio of any G7 country, what does that say about the direction of our fiscal policy here in Canada?
The trends that you've identified are again confirmed in the budget tabled, and we anticipate to retain that kind of fiscal strength in an international comparative context. We've projected nominal deficits that are modest in size and projected to fall over the horizon, our budgetary horizon, as well as a diminishing debt to GDP ratio, which is the government's fiscal anchor. Thus far, and I'll just repeat the use of the terminology, the guardrails, the fiscal guardrails or guideposts that have been established by the government have supported a fiscal strength that has been noted by the credit rating agencies. We continue to have our AAA rating. We hope to continue in the future, and I think our guardrails are a part of that.
Thank you. And just lastly, one last question. Do you think that the impact of doom and gloom projections by, perhaps the Conservatives have an impact on how people invest in Canada, how our economic outlook looks over the next year or so?
I think one way to look at it is maybe to go back to the credit rating agencies. Since we published the budget, they've looked at our numbers, and one of the rating agency, Moody's, have reiterated our AAA rating. When we look at S&P and Fitch, they also came out with a report saying positive thing about the track that we have there in terms of declining debt to GDP moving forward. So overall, I think the investment mood in Canada has been I don't think has changed that much following the budget because of the well-received comments that we got from the rating agencies.
Thank you very much. Merci beaucoup. Suivant, c'est Monsieur.
Mr. Lemieux, you have 6 minutes. Thank you, Mr. Chair. My first question will be for the Bank of Canada. We can see in the figures that the growth of the monetary base was high in 2020-2021. Is this linked to the monetary policy of the Bank of Canada, or rather to an expansionist budgetary policy of the government?
Hear the
On voit que la
we see that monetary growth was high in 2020 and 2021. Is this phenomenon linked to the monetary policy of the Bank of Canada or to the expansionist monetary policy of the government at the time? Thank you for your question. If you'll allow me, I'm going to answer in English.
Nous avons d'excellents traducteurs pour ça.
Yes, we have great interpreters.
If I understand your question, you're asking if the expansion, and it's similar to the previous question from Mr. Chambers, the monetary base, the different monetary aggregates that we would use, is that a result of the monetary policy of the Bank of Canada? Do I understand your question correctly?
On entend souvent Pierre Poilievre.
Well, we hear Poilievre quite often say that it's the fault of the expansionist policies of the government because there's inflation on the other side. He also blames the Bank of Canada. So I'm wondering, where is the truth? Is it between the two? And maybe you can give us some information.
So there's different measures, what we call different monetary aggregates, different measures of money supply. There is printed banknotes. There is central bank reserves that are held by members of Payments Canada at the bank, and there is the measure that Mr. Chambers asked me about, M2, which includes bank accounts that people like you and I have. So the measure of money supply that went up as a result, direct result of our monetary policy, would be the central bank reserves. So those have expanded significantly as a result of our monetary policy. That's a direct result of the quantitative easing that the bank undertook.
Merci, je trouvais intéressant de pouvoir.
Thank you. I find it's interesting to have this answer outside the political framework. So inflation reached 5.1% in January 2022, and the Bank of Canada started its increase in rate only in March 2022. Inflation was 6.7%. Why did you wait so long before increasing rates if the main objective of the bank is to maintain inflation around a 2% rate?
Again, I'm just going to repeat your question and make sure I understood it, sir. So you were asking about the pace of the increase in inflation relative to the pace of the increase in our policy rate, and why did we wait is fundamentally what you asked. Right.
Si votre cible.
Well, if your target is 2%, why did you wait so long that it reached 6.7% before proceeding to an increase?
So I think initially there was a lot going on in the economy at the time, a lot of very unique circumstances. It was very difficult for us to really forecast and even understand in detail what was going on in the economy at the time. The models that we typically use to forecast the inflation don't account for completely shutting down our economy for months on end and then restarting it. So I think initially the central banks around the world, including the Bank of Canada, understood that the drivers of inflation were largely what we would characterize as supply-driven. So there was a lack of supply in the economy. Supply chains were recovering from being shut down. And there were some global forces that were also affecting inflation at the time. The invasion of Ukraine was causing a spike in commodity prices. Typically, those are things that central banks, we would use the term look through, so we wouldn't necessarily react immediately to things like that because you could raise rates, slow the economy, and typically things like supply shocks or commodity shocks recover quickly, and then you may have slowed your economy needlessly when these supply shocks recover. So I think initially the Bank of Canada, central banks around the world were viewing what was happening in the economy, and as the member said earlier, this was happening globally, not just in Canada. Those shocks persisted longer than we anticipated, and at the same time, the demand in the economy came back quite aggressively as we sort of had reopening. So it was a combination of those two things. I would agree. I think the governor has said publicly, most governors have said publicly, that in hindsight, did we wait longer than we should have? Perhaps those supply shocks took longer to repair than we anticipated, demand surged back more quickly than we anticipated.
Je me permets une question sur les.
A question on decision-making process. We oftentimes hear that the Bank of Canada is independent. Could you explain to us how the decision-making process happens when you're who is consulted when you decide on the rate?
I would say the bank has a consultation process that's ongoing. It isn't necessarily at each rate decision. So we regularly meet with Canadians, with Canadian businesses, with organizations, industry associations and stuff. So we are regularly talking to Canadians about conditions in the economy. At each rate decision, we go through quite it might sound like we get in a room on the morning of the rate decision and make a decision, but it's actually quite a long decision-making process that starts with a projection that our staff present to us. We go through sort of a series of analysis. We run some scenarios and that type of thing. So each decision-making process is quite structured, quite lengthy, very deeply analytical. But your specific question about who do we consult, the bank has a sort of robust, ongoing consultation process that helps us stay in touch with the economy.
Et voilà, merci beaucoup. Puis aussi, j'ai ajouté du.
Thank you, and I added a bit of time because we were having issues with interpretation.
Desjardins, Mr. Desjardins, you have the floor for 6 minutes, please.
Thank you very much, Mr. Chair. I want to thank all the witnesses for being present today. I'll start my questions with the Bank of Canada. As noted, there's significant losses from 2020 to 2023. Your policies largely account for some of those challenges. Of course, there was a global pandemic. You just mentioned a little bit about some of the decision-making processes around how your analysis for supply feeds into the policies you make. But in between that time, of course, in addition to what you've already said, what is the total amount of losses, including the indemnities paid by the Government of Canada, and including in that period of I'll let you answer that question first, actually.
So again, I'll just clarify your question. Are you asking for the total losses to date?
Sorry, between 2020 and 2023. And in addition to your former answer on supply, what other factors led to these losses?
Okay, well, maybe do you want to go ahead with the 20 to 23 total losses?
So again, looking at the public accounts for 21-22, we had a surplus. So 22-23 was the first year with a loss at $3.1 billion.
And in terms of the responses, so sorry, was that just the 21 year?
So 21-22 was a surplus of $2.3 billion. 22-23 is the first year with public accounts where we show a loss of $3.1 billion.
And then 2021?
Surplus of 2.
It was a surplus.
Yeah.
Oh, I see. There was a surplus for 2021, 22, 23?
Yeah.
Sorry. The public accounts fiscal year is April 1st to March 31st. For the year 21-22 of the public accounts, there is a surplus of 2.3. And for the year April 22 to March 23, it's a loss of 3.1.
I understand. Thank you for that. And in terms of the impact of COVID-19 on the policies of the Bank of Canada, in addition to the supply concerns that were just mentioned by the question of our Bloc colleague, what other concerns influenced those decisions that were made?
So what were the contributing factors to our decisions to take extraordinary policy steps? Okay.
Yeah.
Well, I guess I would characterize our policy decisions in sort of two phases. The first ones were in March 2020, so this was the very beginning of the pandemic. And at that point in time, what we were facing was an extreme market volatility. So as what often happens when there is a big shock to the economy is investors, companies, households, everyone wants to be cash rich. They want to liquidate investments into cash. So there was what we called a dash for cash. So the market was swamped with people looking to liquidate investments. And so what the bank did was intervene and ensure that there was enough liquidity in the market to keep markets moving and to make sure that this dash for cash didn't result in sort of a downward spiral in the price of assets. So, and that is a role the bank, that central banks play around the world. We intervene in markets when there is a severe disruption that makes the markets not function effectively to support the economy. So that was the first phase of our response. I think somewhere around about May or June of 2020, the market volatility started to sort of normalize and settle down, so markets were back to a more functioning condition. But at that point, really, GDP had plunged. There was, I think, about 3 million Canadians unemployed and many more not working as much as they wanted or needed to. There was no vaccine in sight at that point in time. We were still in lockdown. We were all locked in our houses. I think at that time the view was that we were staring down the potential for something on the scale of the Great Depression. I mean, the other thing that I remember distinctly is oil was trading at about $18, and oil futures were negative. I had never seen that in my lifetime. So that was really the conditions in June. So the judgment of the Bank of Canada and central banks around the world was that we needed to take extraordinary measures to support the economy. Just as in March 2020, it was our judgment that on top of a health crisis, the Canadians didn't want to face a financial crisis. And in June 2020, I think, in addition to a health crisis, we didn't think Canadians should have to face an economic crisis. So we intervened to provide stimulus to the economy by ensuring that long-term rates stayed low and Canadians could access credit and to keep the economy running.
No, thanks for that. And in regards to the work of, this is for finance, the Department of Finance, sorry. In relation to that same period of time during the pandemic, we've seen governments, and particularly finance ministries, and I'll note the United Kingdom, bring in a windfall tax, especially during the period of recovery, largely from when the vaccine had been developed and when governments look to stabilize prices, but also revenues. We've seen the United Kingdom bring in a windfall tax, for example. Was there ever a moment where the Department of Finance considered recommendations towards a windfall tax? Sorry, did someone hear that? Chair?
Yeah, they're getting organized.
Yeah,
yes,
sorry,
go ahead.
we were conferring amongst ourselves. Neither of us is likely the correct finance official to speak on tax issues, but what I had whispered to my colleague was whether we had sufficient knowledge about the Canada Recovery Dividend to at least offer that explanation to you, but there have been particularly focused measures coming out of the post-pandemic, in that post-pandemic context on financial institutions.
Thank you very much.
And
that is your time, Mr. Desjardins. We'll come back to you shortly. Beginning our second round, Mr. Scheer, you have the floor for 5 minutes, please.
Thanks very much, Mr. Chair. Ms. Rogers, you gave a speech a little while ago about productivity, and I just want to make sure I totally understand what productivity means, because I know there's a lot of jargon and term that gets thrown around here. But productivity, as I understand it, is how much Canadians produce, how much trees they turn into lumber, how much grain they grow, how many cars roll off the assembly line. It's basically the things that individual Canadians make. Is that correct?
Yeah, as a function of the inputs it takes to make them. Yeah.
And I think you also said in your speech that low productivity has a negative effect on inflation. In other words, low productivity will have the effect of having higher inflation for longer if Canada doesn't start to produce more. Is that an accurate summary of?
Not exactly. What I said in my speech is that improving productivity would help us buffer the Canadian economy against what we expect to be a potentially less benign inflationary environment going forward.
So in terms of policy tools that would help productivity, can you think of some things that would encourage or facilitate Canadians being more productive, producing more things, and having more goods in an economy?
Sure, I talked about a couple of them in my speech. I mean, things that equip workers to be more productive in each hour they're at work, so additional training or additional tools that help workers produce more per hour. Additional investment in infrastructure, competitive environment, ensuring that we have an efficient regulatory approval process. Those are some of the examples that I used.
So investments in would investments in capital also help with productivity?
Yes.
So would things that would be disincentives, in other words, policy tools that would punish investments in capital, I would assume would then have the opposite effect, that it would lower productivity.
You want to have an environment, all policies in that encourage investment in capital. Absolutely.
Investing in capital. Okay. You gave that speech. How long ago was it? About a month?
I think so. Yeah, that sounds about right.
Do you think it's still time to break the glass?
We haven't fixed it in the last month, if that's your question.
Well, the reason why I ask is because there was a budget tabled just recently, where. So, would you give that same speech today? Would you warn people, say that it's still an emergency situation?
I think this, as I said, we haven't fixed it in a month, so I think the speech stands.
Okay. I want to talk a little bit about the Canada mortgage bonds. I understand that the government of Canada is now purchasing, I believe it's up to $40 billion a year.
It's up to a maximum of $30 billion.
Up to a maximum of $30 billion. Okay, thanks for the correction. Do you see any impact on the money supply by the government of Canada's bond purchase program?
I don't know that if I could isolate that specific program, but Mr. Chambers asked us to give some additional data on what's affecting the money supply, and we'll be happy to do that.
Okay. And so the government of Canada will now own that mortgage debt under the bond purchase program. The Bank of Canada used to buy those bonds for a period of time. My understanding is the Bank of Canada ended that program, but you do act as the financial agent for the government of Canada to purchase these bonds. So the government of Canada will now own mortgage debt as a holding?
My understanding?
Yes, what we're doing exactly is we're basically borrowing money in order to buy finance those Canada mortgage bonds. So basically, we own some of that debt. Yeah.
So the government of Canada borrows money to buy mortgages from banks who have lent money to Canadians. Is that?
Thank you for your question. Basically, the way it works, CMHC basically borrow money in order to buy NHMBS. So those are pool of mortgages that are put together. And when you look at the market, the way it works, CMHC, when they were issuing and they're still issuing, there's a spread relative to the government of Canada debt. So when you look at the debt that the product they're issuing, they're fully backed by the government of Canada. So they should be issuing around the same rate, right? They're a AAA product. And because of that spread, the government decided to issue its own debt in order to finance the CMBs. So the debt that we are issuing, it's debt that basically CMHC doesn't have to issue on the market.
It's guaranteed by the government itself, right? So the government is both the backer of the debt and now the holder of the debt?
That debt was already guaranteed prior to issuing debt in order to buy CMBs.
Thank you very much, Mr. Scheer. Next up, we have Ms. Yip. You have the floor for 5 minutes, please.
Thank you for coming. And if you have to repeat some of the answers from your previous committee work, that's okay. It's always good to learn a little bit more. Governor Macklin confirmed that eliminating a price on pollution would lead to a one-time decrease in inflation. Is that correct?
Yes, a one-time change in a tax leads to a one-time change. So if we were to eliminate the carbon tax outright, it would have a one-time impact. That's correct.
Can you expand on what that means in terms of inflation in the long term?
Well, the impact would last 1 year. So the effect on inflation, the decrease in inflation, would disappear 1 year out.
Okay.
That's your question. Yeah.
Thanks. It was confirmed that the annual increases in carbon pricing raised the average economy-wide price level by 0.1 percentage points. Is it correct to say that would have a small effect within StatCan's CPI calculations as compared to other determinants of inflation?
Well, I think you got the number right. I think the descriptor is relatively accurate.
Conservatives keep arguing that eliminating a price on pollution would bring inflation back within target and would lead you to cut rates, in turn easing the pain Canadians may be feeling. However, during the rate announcement last month, it was clear that the rates weren't going to be cut until progress was seen towards price stability on a longer period. Is that correct, that eliminating a price on pollution would not lead to price stability in the economy?
I would come back to my first answer. Eliminating a tax measure, any tax measure, has a one-time impact. And certainly we base our rate decisions on the long-term forecast, the long-term direction of inflation and of the economy. So,
as we look ahead and consider our future economic position, how much will benefits to the elderly increase in the medium term?
I'm not sure I understand your question, ma'am.
So has the increase in costs as a result of an aging population had an effect on your long-term economic projections?
Well, demographics are definitely one thing that affects an economy. And I mentioned earlier in response to Mr. Scheer's question that when we look ahead at the different forces in the economy, there are some forces that will have a greater or lesser degree on inflation. Demographics is definitely one. As people age, they spend more than they save, so it can be upward pressure on inflation. So yeah, demographics have an effect. I think I'm answering your question. Yeah. Okay.
What are your thoughts on the launching of the new Canada Disabilities Benefit?
I don't.
In terms
my
of the
thoughts.
budget, future projections, and so forth.
We take government policies as given, and we incorporate them into our forecast. So that benefit would be incorporated into our forecast.
So the PBO has reported how higher than projected spending by provincial governments pose an upside risk. If provincial governments step up to help Canadians the way we have, how much could that positively impact our federal finances?
Okay, so I'm sorry, can you repeat the question? You're cutting in and out, so I'm having trouble
Am I
hearing
too
you.
close to the microphone? Okay, sorry. The PBO has reported how higher than projected spending by provincial governments pose an upside risk. If provincial governments step up to help Canadians the way we have, how much could that positively impact our federal finances?
I think that's a question for my colleagues.
So maybe...
I think there are probably a few ways, both direct and indirect, federal finances could be affected. And so, I mean, I'll offer a couple thoughts, but that's all they are. And in the first instance, to the extent that provinces direct their expenditures to supporting Canadians in policy areas that the federal government is seeking provincial cooperation. Some of those are identified in this budget, and there are pre-existing areas like early learning and childcare, for example. This could be a partnership that alleviates pressure to spend at the federal level when the federal and the provincial governments can work together to support Canadians. I'm not sure, though, if the question is more in relation to inflation or macroeconomic impact. So all I'll offer on that point is we had talked earlier about our strong credit ratings, and that's a function
Actually,
of...
Ms. Dempsey, I'm going to interrupt you because
Sure.
the answer's repeating and your time is up. You're welcome to you're welcome to come back to it with maybe more precision instead of trying to kind of guess around the question. Maintenant, c'est encore une fois Monsieur Lemire. Vous avez la parole.
Mr. Lemire, 2.5 minutes. Thank you, Mr. Chair. I'd like to ask the question to clarify, and I'm expecting a more direct answer to facilitate my understanding. Can you explain what caused losses of $3 billion? What impact does this have on the financial situation of the Government of Canada? And the fact that you can have changed the ways of funding, has this had an impact? We went towards a ceiling system. So does this have an impact on the loss, the $3 billion loss?
Okay, I'm going to try and be as direct as possible. What caused the loss is that the rate that we pay on our settlement balance is variable and it moves with our policy rate, and the rate on the bond that we purchased is a fixed rate. So when the policy rate exceeded the rate that we're getting on the bond, you have an income differential. You have a net interest rate differential. That's what generates the loss.
Mais ultimement, c'est...
But ultimately, Canadians will have to pay for this. So this is a change of system that happened as of 2020. Wouldn't it be better to go back to the former system if it's making it so that you have losses that have to be assumed by Canadians?
I would separate what we call our extraordinary monetary policy, which is the actions we took during the pandemic I described earlier. So the losses are being generated by our government bond purchase program. In our normal operations, we also have settlement balances. And in our normal operations, we're able to manage our interest rate risk by offsetting those settlement balances with investments of a similar duration, so you don't get that interest income differential and you don't run losses. So that's sort of normal operations. The losses are generated by the extraordinary monetary policy we took in response to the pandemic. So the losses are temporary. They will last. We can give you the exact numbers and duration, but they are temporary, and we will go back to a surplus position.
Merci.
Thank you.
Voilà, merci beaucoup. Suivant, Monsieur.
Thank you, Mr. Desjardins.
Thank you very much, Mr. Chair. I'll return to the Department of Finance related to how its response to and trying to get a manage or a hold on some of the serious deficit issues that I believe we often talk about in the House of Commons, but I think the policies and procedures related to it are often missed, and those nuances are missed. We know there was a capital gains tax implemented in this last budget. It's something that we support, of course. We think that the very small upper 1% of the country should be paying its fair share. We know, however, over the course of the last 20 years in Canada, we've seen the share of the tax burden decrease for the wealthiest 1%, particularly corporations. And we've seen this tax burden fall to regular Canadians. We often hear from the Liberals or the Conservatives that the only solution to this is either to cut services or to ensure that regular Canadians pay more. In fact, there's like another solution to all of this, which is to ensure that those companies like Loblaws, and most particularly, are held more accountable for their actions. How does the department recommend or create policy recommendations to the government in relation to trying to curb the greed of mega corporations like Loblaws. The same corporation that was charged by our Competition Bureau just recently in a bread fixing scandal. There seems to be no path forward for Canadians who are right now seriously considering how they move forward in life when these kinds of outrageous bad actors are plaguing our system. What advice do you have to Canadians who are suffering from this kind of greedflation that's predominant in groceries and in gas, but most particular to solutions? What do we have in terms of tools that Canadians, particularly the government, has to ensure that this kind of greed is tempered so that situations like a bread fixing scandal doesn't happen again?
Mr. Desjardins, just is that a question for finance or for the government?
The Department of Finance.
Okay, thank you.
I'll offer a short reply, recognizing once again we had come kind of to support the public accounts versus this kind of broader policy area. But the government has taken a number of steps, and just to be economical with your time, they're summarized in the budget that was tabled recently around supporting affordability for Canadians, including related to groceries, junk fees, using a suite of measures consistent with federal powers such as competition policy, among others. So if Canadians are looking for answers in terms of what the federal government can do, there is quite a nice summary that's only a couple of weeks old in the budget on this.
Hi, Mr. Desjardins. Next, it is Mr. Stewart. You have the floor for 5 minutes, please.
Thank you, Mr. Chair. I'd like to welcome the representatives from the Bank of Canada and Department of Finance, and thanks for being with us today. While it's a sunny day in Ottawa, dark clouds, storm clouds are looming across Canada as the Liberal government's inflationary spending has driven interest and mortgage rates way up. All of this borrowed money and an astronomical annual interest payment of $53 billion on a $1.3 trillion of debt. Canada is now spending more on debt interest than on health transfers. It's so sad to see more money being given to bankers and bondholders than to the provinces to pay nurses and doctors in our healthcare system, an unfortunate reality in my home province of New Brunswick. Would the Senior Deputy Governor agree Canada's inflation problem, national debt problem, and endless annual deficits under the Liberal government are closely related in damaging Canada's overall fiscal position?
I'm sorry, repeat your question, sir?
Would the Senior Deputy Governor agree Canada's inflation problem, national debt problem, and endless annual deficits under the Liberal government are closely related in damaging Canada's overall fiscal position?
I'm happy to give you the bank's view on what is causing inflation, what has caused inflation, what is still causing inflation. Inflation started in Canada, as it started in many countries around the world, as a result of the conditions I described earlier. We had, as a result of the pandemic, we had a number of supply chain problems. We had a global shock to the economy with the invasion of Ukraine that drove it.
With all due respect, number one, that's not the question I asked. And number two, when you print money, that also drives up inflation. So we could go there and just stay there and talk about how, even though there might have been slight inflation, the current government made inflation much higher by printing money, which drove up the cost of goods and made fewer goods. And I think that's an important point. So if you're not comfortable answering that question, I'll move on to the next one. Last week, the Governor of the Bank of Canada confirmed the Liberal government's $61 billion in new spending is not helpful in bringing inflation down and lowering interest rates. And as I've just said, the Liberal government contributed heavily to the inflation by printing money. The latest wacko spending budget brought in by Finance Minister Freeland did not stop the inflationary deficits that are driving interest rates up sky high. It will not stop endangering our social programs and jobs by adding more and more debt. Over the past 9 years, the Liberal government has doubled rent, mortgage payments, and down payments. While life has gotten worse for all Canadians, the Liberal government is spending more than ever before, including $61 billion in reckless new inflationary spending. This is costing the average Canadian family an extra $3,687 per year. Former Bank of Canada Governor David Dodge said this is the worst budget since 1982. Does the senior deputy governor agree struggling families cannot afford higher taxes and more inflationary spending that drives up the cost of everything and keeps interest rates so high?
I would agree it's been a very difficult time for Canadian households the last few years. The combination of high inflation and the response to high inflation, increase in interest rates, has been very difficult for Canadian families. Absolutely.
How much time?
A minute 20.
Despite a record of 9 years of failure, the Liberal government has doubled down on the same spending that has caused so much misery in the first place, pouring even more fuel on the inflationary fire and driving up interest rates. Does the Senior Deputy Director agree that instead of giving more money to bankers and bondholders, we should be investing in our doctors and nurses?
The Senior Deputy Governor doesn't make those decisions.
That's fair. Do you agree with it, though, the statement?
I don't make those decisions, so I don't weigh those choices. That's not my job.
So you don't have an opinion on it. Okay. Last week, the Bank of Canada Governor also warned Canadians that unaffordable housing will continue into the future. This follows a recent report from the Canadian Mortgage and Housing Corporation, which confirmed that housing construction is plummeting as prices get more expensive. Under this current government, housing starts will be lower in 2025-26 than they were in 2020-2021. On top of this, the CMHC forecasted that rents will rise and vacancy rates will fall as more people compete for less housing. Does the Senior Deputy Director agree that Liberal government are simply not building enough homes for Canadians to live in?
The Senior Deputy Governor of the Bank of Canada would agree that we have a housing supply shortage in this country, and it is driving up the price of housing, one of the things that's adding to the difficulty for many households. That supply problem in housing has been with us for a long time, and it's not something that can be fixed quickly. Supply of houses is something that's going to take a long time and a concerted effort and a lot of cooperation from different levels of government to fix. And we're pleased to see that cooperation is accelerating.
Thank you very much. That is the time. Turn on Ms. Bradford. You have the floor for 5 minutes, please.
Thank you, Mr. Chair. Conservatives often scoff at the fact that we have a AAA credit rating, and I believe we're one of the only countries that managed to maintain that coming out of the financial situation imposed on us by COVID. So I was just wondering if you could please explain in simple terms what this means to Canadians and how important a AAA credit rating is, and why it shouldn't be casually dismissed.
Yes, I can answer. Thank you. Basically, AAA is the highest rating that you can get in the market. So it means that the debt we're issuing in the market is the safest instrument that you can find, which at the end of the day made our product like basically price higher than any other one. So when price is higher, rates are lower, and it makes us in a better place to finance our debt at a much lower rate than any other country.
Right. Okay, so that's a big advantage then to Canada and to all of our companies and like even consumer interest rates, because it's all relative, right?
Exactly, because the Government of Canada debt is the benchmark for all the other debt instruments in the country.
And because we had AAA credit rating going into COVID, and we were in such a good financial shape, we were able to take on, the government was able to take on a lot of debt to help support Canadian families and businesses at a lower cost because we could take advantage of that AAA credit rating, correct?
That's correct.
Okay, thank you. Now, we also saw that the PBO has reported how higher than projected spending by provincial governments have posed an upside risk. Like, it's not just the federal government that spends public funds. The provinces do as well. Their debt ratio, I believe, is considerably higher in most cases than the federal government's, and so their borrowing costs are more. If provincial governments were to step up and help Canadians the way that we have at the federal level, how could that positively impact the federal finances?
I think we already kind of answered that question already. Like it depends on what exactly they will spend on. But at the end of the day, if they're helping customers in Canada, that should have benefit. That should benefit the aggregate Canadians. So that should be a positive outcome.
Okay. I wanted to turn now to look at the impact on the economy of climate change. And the Bank of Canada has done substantial work on the potential financial stability implications of climate change alongside other central banks. So, Ms. Rogers, can you speak about this work and describe what some of the key climate risks are to the financial stability of Canada?
Sure. We think of climate-related financial risk, climate-related financial stability risk really in two categories. The sort of easiest one and most obvious one is what we call physical risk. So this is the actual damage to the economy of climate events. And basically the knock-on damage that has to the financial system. So we've done some work in this area where we have modeled things like flood risk to financial institutions. So we looked at the impact on insurers, the impact on banks, and sort of the connection between those two things. We've done a number of studies. We cooperate with the financial institutions themselves and with the Office of the Superintendent of Financial Institutions. So there's a number of reports you can find on our website that look at this risk. I would characterize the conclusion that we've not yet seen these risks on a scale that would destabilize the financial system as a whole, but it very much depends on the size of the shock and the transmission across different participants in the financial sector, the scale of the impact.
There's a lot of concern that there are some places that won't be able to get insurance because of adverse weather conditions and the pattern. For example, in Florida, certain areas have uninsurable mortgages in high climate risk areas. So if we're looking at home insurance, if the value of insurance becomes less available or prohibitively expensive, this could get in the way of home ownership. And if we can't get home insurance, you can't get a mortgage. A lending institution isn't going to give you a mortgage if you can't get insurance. Is that correct?
Yeah, well, I mean, you've described one of the risks for sure.
Right. So that's a bit of a concern, right?
Yeah. The other risk that we think of is what we call transition risk, which is the risk that the price or the value of assets will change as a result of climate risks themselves or policies to address climate risks. So you could see sharp repricing of assets or repricing of risks in the economy that could be destabilizing. So that's what we characterize.
Thank you. That is your time, Ms. Bradford. Turn now to Mr. Nader, our third round. You have the floor for 5 minutes, please.
Thank you, Mr. Chair, and through you, thank you to our witnesses for joining us. I'm going to begin with the Bank of Canada and hope we can get some kind of general questions out of the way off the bat. Was reviewing kind of what is currently there in terms of treasury bills and domestic marketable bonds, and my understanding is treasury bills about 276 billion outstanding, and about a little over $1 trillion in terms of bonds. Am I right to assume that as these mature, they are reallocated and re-put out for purchase at whatever the rate would be at the current time? Am I right in assuming that?
I'm going to start by asking Coralia to just clarify the numbers.
The numbers you're citing are on the government statements, so I will let the Department of Finance respond.
Those numbers are correct. Basically, we have around 270 billion in T-bills. The way it works, our debt will come to maturity. We issue our debt through auctions, and it's basically a primary dealer distribution. So we have a number of dates that are already set up that we announced at the beginning of the quarter. And basically, most of the debt that we're showing is debt that's rolling over, that we call. So I think this year we have 85% of the overall envelope that will be debt that will be rolling over that will need to be reissued in the market.
And when it's reissued in the market, if it's at a higher rate than it was prior to maturity, that increases our costs.
course, like it will be issued at market rate. So depending on where the rate is, and that will depend, like that will impact the interest, the debt charges that we'll have on that debt.
And so, that's exactly it. So as it matures, if it stays high, it costs Canadians more money. I want to look at the analysis, though, of the bonds. Would you be able to tell us, or is there? Could you provide the committee with a breakdown of who owns those bonds, whether it's domestic ownership or international ownership?
Yes, I can. So basically, in Canada, most of our debt, first of all, it's all issued in Canadian dollar. Most of the debt is owned by Canadian. We have 30% of our debt that's owned by foreigners. When we compare this share to other countries, other G7 countries, we're in the low range, which is really positive for Canada. Otherwise, we have around 25% that's currently owned by the Bank of Canada. The rest of it will be owned by institutional investors through basically savings that individual Canadian will put in banks and basically be funneled through like basically